What did you talk about in that meeting?
No, it was just a very casual exchange of information. Elon Musk had tweeted some thoughts around Bitcoin and its energy usage lately. And it was really a forum for a number of Bitcoin miners just to talk about what they're doing relative to Bitcoin mining in North America, what their relationship with renewable energy is. And I think that's a story that doesn't get told enough. And what's important to note is Bitcoin miners are using more renewable energy than any other major industry on average. 76% of Bitcoin miners utilize renewable energy in their mix-up. About 40% estimation is about 40% of global Bitcoin mining is powered by straight renewable energy. And there's a couple of key reasons for that. One is Bitcoin mining takes energy as an input. That's what helps drive the security for Bitcoin. It's a very important tool that allows disconnected parties all over the world to run this financial system without having to trust each other. And the story that needs to be told is you find this energy, you find low cost energy where there's a surplus of energy, where there's energy that's not being consumed because there's a renewable generation source stranded out there, congested out there that doesn't have energy, doesn't have a buyer of that energy. And Bitcoin miners are the buyers of last resort of stranded energy. So the discussion with Elon was really an opportunity for a number of large Bitcoin miners to talk about what they're doing relative to their energy makeup.
I've got to just challenge you on a couple of points there, Jason, because they kind of flew by. And we've got to be a little careful. Statistics, as we all know, can be sliced and diced. Bitcoin miners are not the largest users of renewable energy. I think what you mean is that on a per capita basis, more miners as a percentage may use some renewable energy than, say, the big, broader industrial base. I'm not quite sure. There is clearly a problem of carbon intensive and non-renewable energy use. A lot of it, coal, is the problem with Bitcoin. In other words, you just said a bunch of stuff that suggests there's not an issue here. There's a huge problem here with the footprint, the carbon footprint of Bitcoin mining.
I would disagree with that statement respectfully. Bitcoin mining is a very, very, very small part of global emissions. Bitcoin mining consumes about less than 1/10% of the world's energy. And in doing so, it creates an open and free financial system. It's a very noble use of that energy. And on average, it is using more renewable sources than other major industries, more so than other industries like gold mining. Bitcoin mining uses a lot less energy than gold mining. So I think that's driven by Bitcoin mining's indifference to location and time of operation.
Okay. I mean, again, we got to challenge you on what you just said. I apologize. I don't mean to keep challenging you, but Bitcoin mining may consume less energy than the aerospace industry. I don't even know if that's true. What I do know is the concerns are real and valid. Elon Musk has raised them, but so have many, many investors out there. And this is a decentralized operation, right? You can't necessarily control the energy sources of a lot of the mining that's going on in Bitcoin. So I guess the issue I'd put to you is, how do investors in this space who want to know that they're being looked after on sustainability feel some comfort when it comes to Riot and to other big miners, that you're taking it seriously?
Okay, Amanda, let me answer your question this way, actually. The outcome of the discussion with Elon Musk was a group of miners deciding we need to be more transparent with our energy makeup and be telling the story to the market what our relationship with renewable generation is. That's what a lot of us do individually already. Riot has operations in upstate New York that's 90% hydroelectric power. Our recent acquisition, Windstone US in Texas, is a part of the ERCOT grid, which has a growing abundance of solar and wind energy in that grid. So the resulting conversation with Elon Musk was miners coming together to start what's being called the Bitcoin Mining Council, open forum for all miners to join. And we are working collaboratively to disclose our energy makeups and tell a story to the market, let investors see for themselves the generation mix of the miners that they are considering investing in.
Jason, would you like to see more regulation, as it would perhaps lend more credibility and more transparency to some of these efforts?
I think when you look at an energy market like ERCOT, what you see is a model market with low energy costs and a growing base of renewable generation sources. And that's driven by a deregulated marketplace. Economics drives ERCOT, not politicians. And that lack of regulation has made Texas one of the largest state when it comes to wind generation and a rapidly growing amount of solar generation. Without any regulation, the ERCOT energy mix-up went from 18% coal in 2020 to 13% coal in 2021 so far. And it's expected that's going to continue to decrease because it has a marketplace that fosters renewable generation development. Solar and wind is increasing rapidly year over year in that market. And I think market incentives are driving the result that people are looking for in renewable generation, absent government intervention.
Jason, as you have noted, one of the appeals for some of the space, and certainly to own Bitcoin and use Bitcoin, is to stay kind of beyond the reach of government. And yet, as China has shown, governments still have a lot of influence here, and some haven't really weighed in on what they're going to do about cryptocurrencies particularly. How big is that risk?
I think one of the main risks around the Bitcoin industry is regulatory risk. Governments can step in and they can make life more difficult in the industry. But what's important about Bitcoin is it is a tool for censorship-resistant money. It is a tool that gives the common individual sovereign control. So while governments can come in, they can regulate fiat on-ramps and off-ramps, they can introduce reporting requirements. Ultimately, this is a free and open global financial system that is at a point, it has grown to such a network effect that it ultimately, I believe, cannot be stopped.